Hi traders, Nick Shaheen here recapping the week for Benzinga. And let's see here, the scoreboard today, kind of misleading, but we'll go through it anyway. Up 0.5% on the Dow and the SPX. NASDAQ about half as that, up 0.22%. The small caps were almost flat, up 0.12%, although the TF was up just 0.06. Okay, so why do I say kind of misleading? Because overnight, central bank Friday seems to be the day they want to announce surprise cuts. This is the S&P, and let me show you. Let me zoom out to 5 minutes. And right around here, middle of the night, this is the night, early morning our time here in the U.S., bam, we had a couple of headlines. China cut rates in a couple of areas. Was a surprise to everyone, kind of like about 10:30 October 30th with Japan when they announced the QE. And then everything went wacko. And also we had Draghi speak again without doing much extra or much new about doing all that there is to be done in order to save blah blah blah. So the markets took it and ran, and we headed to highs that we haven't seen before. This is the ES S&P representing, and the E-mini, and then it was up to 2072, and so the settlement values were a travesty, because if somebody left a credit call spread open, they got blown out. I believe the settlement value on the SPX was somewhere in 1975 area, and the NASDAQ was about 40-50 points higher than where actually where it ended closing. So, or at one point, I didn't measure it, the last one. Regardless, the settlement values were wacky because they are AM settled, and they settled towards the open, and they take into consideration whatever doesn't open fast enough of yesterday's close, and the values are pretty wacky. So regardless, that teaches us a lesson to close all the spreads beforehand on the AM settled issues. That's why I'm saying it's misleading, because we had a super exuberant day. However, we slid all the way to about an hour and a half, with about an hour and a half left in the day, and the VIX then just let up, meaning it broke down right around here. It was about flat, and then it closed down 5% on this little run up. This run up happened, I don't know on what. The bond market was increasing at that time, and that usually is not the case, and the 10-year rates was decreasing, and that usually is not the case to be market exuberant. So all kinds of weird things happening. I think the confusion of the announcement just threw out a lot of the fundamentals, or made them sporadic more than actual happening. So oil opened up big, or pre-market was up over 2%, then the dropped, completely dropped down, almost let all of it go, and then rebounded a little bit, and this is oil right here. This is the NASDAQ. If you wanted to see the pattern in the NASDAQ, very similar to the S&P, straight down from the open. At one point it went red, double bounced on the red, and then rallied, that mysterious rally towards the end to flatten out. It still closed up a little bit, but the candles are ugly, and we'll look at them a little later. Ugly from the standpoint it could have been so much better, and it let it go. Small caps were the most confused, and I'll show you why. The small caps also trickled down all day, and then settled down on a double bounce at the end, and they definitely turned red. Chipotle, I was watching it, and also was quickly 667 at the open, and then 657, $20 span. Apple too, 117.68 at the open, then quickly let it down, almost broke down at 116 here. So the day could have been a lot better. However, it wasn't as good as it could have been. So is that harbinger of more downside or negative pressure into Monday without a headline? I'm not certain. It's a coin flip at this time. So Monday, who knows? So let's look at the whole week, and the candles are ugly today because they could have been so much better. We already discussed that. Volumes, I can't see them right here, so let's jump into the weekly actually, because I want to show you something here. If we take 1 year Each candle is 1 week. We've had 1, 2, 3, 4, fifth week in a row where the Qs are green. This is a doji-ish candle, meaning it's centered toward the middle, so there was kind of indecision because there's a high that they couldn't hold, there's a low that they couldn't sell, continue holding and sell off. So it's kind of doji-ish, but it's still a bullish market. The bulls are complete control. There's no reason to short just based on this one. If I go to the SPY, probably about the same picture there. Slow computer today. I have so many things open, so bear with me. 1, 2, 3, 4, 5 weeks also green, and the candle also the volume was just as much as last volume, but still weak. You see the reds were high volume and then were dwindling in volume as we're rising. And oddly enough, we hit that upper end of the range and we kissed it. What do we do now? Your guess is as good as mine. So let's look at what happens on Monday. When Monday comes, short week, Thanksgiving in the US coming up. Usually it's bullish, so let's see if they're going to be able to run it up. Usually, I think historically I saw a chart where it's bullish into and then bearish after. So it is a short week, so you can take advantage of the extra day of theta where you don't have any trading. But here's the key point where I wanted to show you. I've been saying for the whole week and last week that we should listen to the NASDAQ. We should listen to the small caps, and here they are. I say the small caps usually tell us what's going on ahead of time, and they have been confused for 3 weeks straight. This week's candle is a complete doji. You can see how it's closed right in the middle. So they opened it, they tried to run it, they tried to sell it, they didn't know, so they went back exactly to where they opened, and they said, I'm going to close it exactly the same place. They did that last week, and they did that the week after that. So, and if I switch over to the daily candle for the small caps, this is 1 year dailies. Where was I going to go with that? We've had this box that they've been trying to break, and today they tried to poke into it, but they ended up closing on the bottom end of it. Let's see, the 116.58 is right around here. So they closed towards the end, and I'll have to fix this chart. So anyway, so they're still undecided, but decidedly scared. So let me go back and show you that we have had a similar run up here. See that area right there? We have had a drop, run up, and a drop, very similar. After the drop, we had a rebound to challenge this green one, and then another drop. So we had a rebound to challenge the green one, and what's coming up after this candle right there? So we're at this candle. Are we at this candle right there? I don't know. We shall see. I mean, the even the MACD is about the same. If you follow it down, it's this area. Crossover. Crossover. I mean, these are not surefire things to tell you to go short, but it's surefire thing to tell you if you're thinking about piling in long, you might want to wait a day or two to see if you are here. If you are here, then you want to pile in short. But I may need to see one more tick or two. Let's see what happens. So anyway, how do you trade coming out next week? Very cautiously, very light. It's going to be light volume, and it doesn't take much to move markets on light volume, so it's best to be cautious. I'm playing Chipotle. I'm trying to range bound it via Iron Condor. You can probably do the same. I started out with opening credit call spreads, and you can peck into going in some credit put spreads for some income. You can try to go long your favorite stocks. I like to go long Alibaba on every sell-off. This week it was range bound by the open interest, and I'll peek into it next week to see how I can trade it. Debit call spreads probably my favorite on sell-offs, and maybe financed by some credit put spreads. CAT is a gift today, I think. If you were caught into it red, and this pop of 4 or 5% this morning was a gift, and you should have taken it to lighten up on your long position there. Tesla, hideous price action today, down 2.5% almost on a day where markets were up and away. Netflix, similar story. Priceline, similar story. There was some chatter about Priceline takeover, but of somebody, it was up on that, and then it closed a little red. Amazon had a positive mention and a raise, and it was happier than it actually closed. Google was a champion. There was chatter of Google getting sued or getting lined up to be sued to be broken up by the EU Commission. That happened to Microsoft years and years ago. It shrugged it off. It outperformed the market all day, and it closed just in line with the S&P and outperformed the NDX and Apple. Apple didn't like the price action. This is the week in review. Nick Shaheen signing off. A little longer video than I anticipated, but thanks for your time.